Hello gamers and dragons, Stardust here. Maybe you don't have the luxury of trading during the popular trading hours, so what we're going to do is look today at different times of days that you could possibly get in some good trades. So we're on the NASDAQ, and it's August 31st, and it's 19:35 or 7:35 p.m. Central Time. And we're going to look at how we're marking our highs and lows for our trade this evening. We mark these two highs. We could mark this one here and be looking for something to happen at these spots. Now, these are typically zones, not just a thin line. Here is a low here, and this is kind of another area that I'm going to put it between these swing lows. We might want to go a little bit farther back and see what we have going on over on the left. And this confirms that these are areas that price has hit and reversed before. One thing I'm going to do is I'm going to go ahead and add something here just in case price is plowing through this and we want to, hold a little bit longer. And this is a swing indicator here. Here's our properties for it. I use the drawing tile tool, price line, the swing indicator, one of my favorites, the 50 EMA, the 200 EMA, ATM strategy identifier, and this is my favorite MA cross builder, which you have to get it off of the website for NinjaTrader indicators. This is a custom indicator I wrote to change the wick colors because wick colors are usually white and I don't like them being white. I want them to be the color that's in charge. And then we have our time frame overlay, which is a custom indicator that I wrote to allow me to add the 15-minute, 5-minute to the chart. I've switched from the NQ December 25 instrument to the NQ September 25 instrument because the December 25 didn't start until September 1st, and we're on August 31st, and it was giving me weird values on the screen. So we're back on the instrument that August 31st actually was using. Now, what we see here on the screen is that we had a green cloud ascending, but then it started coming down sideways and then got very narrow, and right now we're having the crossover, and you can see this by the vertical bar and the icon above it. We're going to be observing to find, is this truly a crossover or not? This has gone sideways for a while, so there's no indication on here that it is a true breakout. What we're looking for is a breakout of the swing level. Price must be below the 50 MA, the 50 moving average. And so we're going to wait until we see that. You don't want to rush into a trade just because you've got a crossover. So I'm going to go ahead and press the play button, and we're going to speed this up a little bit. And if this does break out below this, we're going to be looking for a possible pullback and continuation, and we will be entering a sell order. If we take a look at our 15-minute chart, you'll notice that the green cloud ascending is still there, but it is now sideways. And so it may have a crossover coming up too, which would be confluence or confirmation that the trend is changing. Okay, there we have our breakout. And you don't want to trust a breakout. You want to wait. Okay, so see there, it turned green. If the next candle is red and it stays below the white 50 MA, then we'll enter a short. Now, we also want to look at this 2-minute chart to see what the colors are happening over here. It was green. Now it's turning red. But this is a 2-minute candle, not a 5-minute candle. 2 minutes are more unpredictable. Okay, notice we have a big fat candle over here on our 15-minute chart, and I am using the equal volume candles that are based on the volume of the candle. Keep an eye on this. It's turned red. Our next candle is turned red, but it could go back up, so we're going to give it at least half of the body of this green candle before we enter short. And we're going to press sell now. Now we want to take a look at our buy stop and our profit target. We have a $500 stop loss, but I'm going to move it just up above the white 50 MA, because if it goes back up there, then there's no point in losing more money, hoping it'll go back down. So we're going to go just above there. So we're looking at where we have our profit target, and it's between the two lines that we marked based on previous activity and where prices stopped down here and reversed. And we're going to go ahead and keep it at the 2000. Okay, let's look at what's happening over here on the 15-minute chart. Price is going down. And if we look at this green trend line, that is an indicator that I have on the chart. And you can see that it's got a long-term indicator from the low going up, and it's marking these 2 points here and continuing up. So we want to pay attention here to see if price flounders. We're looking for a breakthrough of this trend line as well as a breakthrough of these support levels down here. This is our 5-minute Heikin-Ashi, and notice that it's showing that red is in control very strongly, and it's going down. And even if the candle over here were green, if this is red, then that's a confirmation. So this is that trend line that I was mentioning earlier. We want to see what happens to price there. Notice the candle is big and fat. We have a 1,445 volume candle, and price continues below that trend line, which is good. And now we have a 15-minute crossover. And so when we have a 15-minute crossover after the 5-minute crossover, that's a very good sign that price is now reversing and going in a new trend. Here we do have a green candle, but over here our Heikin-Ashis are showing a strong red, and so we don't want to freak out when a candle color changes. And so here on the 2-minute, it's green. You can see the wick at the top of this indicating that it did go down red again, and now the next 2-minute candle is red again. So you don't want to get anxiety over the green candles on the 2-minute chart. The 5-minute chart could start out green and then immediately change to red like this one just did. You want to pay attention. That's what these Heikin-Ashis are for. Look at them, and if they're the color you want, then you can kind of ignore what's happening over here, because you can know that red is still in control in spite of the green over here. Our 15-minute shows strong Heikin-Ashi. Our 5-minute Heikin-Ashi is a strong red, and it's going down. And what I'm going to do is I'm going to draw a trend line here on these candles. And I draw my trend lines at the tops of the candles. I've seen people say, oh, just draw so that it hits most of the bodies of all the candles. I could find absolutely no support for that. What I do find is you mark the tops of the candles, and if most of the bodies are not marked, don't worry about it, because that is truly the spot. Price is going to go up to and back down again. Now, the point of the trend line is if you see a green candle going up and back through the trend line, that is when you need to start worrying about, oh no, am I going to be in trouble here? But if the price just taps around this area and goes back down, then you feel more secure about staying in the trade because it's still following that trend line. Okay, price is now green on the 5-minute chart, and it is actually above our trend line. So we need to watch out for that. So our next don't worry thing is that this cloud is descending. It's not as steep as we normally like it, but it is still descending, and it's fat and red. So it is normal behavior for a candle to go up and tap that 9 MA on that cloud and go back down again. So we're going to watch for that. And it did do a tap and then immediately went back down within the same 5-minute period. And again, 2-minute, we are not trading on what's happening on the 2-minute. It has a lot of false positives. So we're trading on the 5-minute. We have the candle's tapping up to the red cloud, and it looks like it's going to try to go sideways for a little bit, and that's normal too. So we're still below the 9 MA, and so we're not too worried. And even as long as we're inside this cloud, that also could indicate not to worry. What we can do is we could pull our stop loss into the trade so that we at least make a little money and we don't lose any fees. I'm going to set this close to $200. That's one thing you can do when you're trading. You could pull your stop loss down into the trade as you go, but don't move it too close to where price is, because you could stop yourself out, still make a profit, but not as much as you could have made if you hadn't brought your stop too close to the candles. We're getting a nice long red candle here. It's turned green again over here and going back up into itself. So it is struggling a little bit. It is still trying to go sideways. Price has gone back up inside of our cloud, which is always iffy, but as long as it's staying below that 20 MA, we can consider this sideways activity and stay in. We could have taken profit down here on this candle, but we're going to go ahead and stay in the trade because the trend is still showing we've got a red cloud descending, and over here our Heikin-Ashi is saying that it's still red. And here when the Heikin-Ashis were green, as long as it was at the bottom of the cloud, we don't want to worry too much about that. We're going to go ahead and speed this up some more. So it looks like our price is going sideways. It's consolidating. Target filled. And now we just had our target filled. So let's look at how far it could have gotten. So notice the price went back up through our cloud tap to the 20 MA and then reversed. Hitting a 20 MA tap isn't bad, but it's also very risky because sometimes it's going to blow right through and do a reversal. Okay, here we've got it reversing back up through. The cloud is ascending. The edges are green. And there we see that price has gone back down. So from our entry here, which you can tell by the little icon there, this is where we exited. And this is as far as it went down. So that's 2,880. Okay, what's the problem with holding to 2,880? Now we got out at 2,000 just before it reversed back up to the cloud, tapped to the back of the cloud, went back down, and then it even went above, changed it over to a green cross over here, and then tapped back down to this. There was no guarantee that was going to happen. It could have very well gone straight up like this one over here where you have a crossover and it continues along. So you always have to be careful about trying to hold too long. So this is a $2,000 win on the NASDAQ and a $200 win on the micro MNQ. That's it for the day. That's an example of doing a breakout entry, a pullback, a continuation, waiting for price to be below the 50 MA, looking at the cloud, accepting a cloud taps backs and then continuations, marking where price had previously hit to know where to put your profit target. And that's it. So if you'd like to learn more about this in the future, please like and subscribe. Thank you very much. Bye.